Hi, Larry Berman here, and here's what's on my radar this week. Well, I think the word of the week, word of the month, the word of the quarter is inflation and inflation expectations. We've seen inflation expectations come off significantly. Equity markets responded okay if you kind of look at May being done, given Monday's U.S. holiday. It was a generally flat month, but they started to sell in May and they didn't really go away. Challenging markets here, I think, going forward for lots of reasons. Inflation expectations are amongst them. We saw many indications that inflation's numbers are going to be a challenge for a couple of months, but we knew that, and we knew that a couple of months ago. So nothing new for the markets from that perspective. When do the markets start saying, hey, we're really worried about this? And to me, it's about wages. And when you looked at unit labor cost and things like that, you're starting to see pockets, in different sectors for sure. But I like to use the Diet Coke, Diet Pepsi example, and I've used that before. For the bottom half of the K, plus me, because I love Diet Coke. I'm a Diet Coke aficionado. I could tell you when it was bottled, like some people can tell you where the wine came from. But if Diet Coke isn't on sale that week, I often go buy the Diet Pepsi, right? So it's that kind of substitution that's really driving things, and not just at the bottom level, like everywhere. You shop at Walmart, live better kind of thing. That's the world we live in today. When wages get to the point where where people don't have to do that, that's when inflation can really take off. When people say, I'm okay paying full retail for that. I don't see that scenario anytime soon. But every time Biden did a speech this week, pretty much, he mentioned the word labor and unions and the backbone of this nation. And so I think as long as Biden and the Democrats are in charge, we're going to see a significant policy shift towards raising wages and labor and unions. And I'm not saying that's a bad thing. I'm not saying that's a good thing. I'm just saying that's where I see policy going. So the midterm elections then become very, very important. Who controls Congress? Who write the checks? And so for now, even through reconciliation, they can spend a lot of money. We heard a huge number out of Biden this week in terms of the 2022 budget number, around $6 trillion. That, if you do the math quickly, 1.7, 1.8 trillion in deficit. That those bonds need to be funded. So we talked about the funding challenges for the next few quarters. Looks like well into next year, taxes going up. All that to me doesn't spell multiple expansion. It spells a challenge. So I think best case scenario here, we need a correction. We need some of the froth to come off into the next couple of months. Nothing sinister, but 10% off the S&P, wipe out the year-to-date gains. That would stress the Fed. We'll see what they say about tapering at that point. I think that scenario is still what's in front of us here. So be mindful of that. As to in terms of what you buy today, we're struggling to find names here that we're fist-poundingly confident about owning. There's a couple consumer staples. What did we add to the portfolio defensively? I bought some Maple Leaf Foods today into our stock portfolio. Not that I'm wildly bullish about it, but as defensive holding that might have 10%, 15% upside over a 6 to 12 month horizon kind of looks good. So, on the ETF play, what are the long picks of the week? Consumer staples over mostly everything else, but not because I'm bullish and would see the upside. And then consumer cyclicals would be, a short. So if you're thinking about a pair trade, that would be, one thing to look at. Anyways, long weekend again because Monday with a US holiday, Canada just is shut down. So let's go US long weekend. Have a great one, everyone. And forget that it actually snowed a bit in Toronto today. Have a great week. Be well.